tax subject is very complex and very complicated. A lot of people have this confusion on taxation, especially investing for dividend on income, right? So I had a question yesterday from a subscriber, and he asked me, he wants to they buy the Yale Max ETFs, but they are wondering if they invest that using TFSA, what's the implication. So in this video today, I'm going to give you a little brief of how tax works under Canada US treaty. So for example, if you are an investor, first of all, you have to know what type of investor are you. So let's say, for example, you are a Canadian person for tax purposes, right? So I don't care about your citizenship, I'm just saying you're a Canadian resident for tax purposes. So that way, so you live in Canada and you pay taxes in Canada, but now you buying a US stock. This US stock pays dividend. So for in that case, you're going to pay something called withholding tax. But this also depends on what kind of account you are holding. For example, if you are holding any of these stocks in RSP or a lira, then there's a treaty agreement that between these two countries that you are not going to pay tax on those dividends you're receiving. So for example, if it's $100, you will receive full $100. But if you are holding, let's say for example, the same stock in TFSA or RESP, then you're going to pay 15% withholding tax on this dividend you're receiving. So for example, the company A is paying you dividends. Let's say Walmart is paying you dividends, right? And then you are taking they pay you $100, this quarter, for example. So you, in your account, you're only going to receive $85 because $15, which is 15% of 100, will be taken from your account. That's how it works. So by the way, for when you open an account, any account in Canada, right, your brokerage will give you forms called W8BEN. You have to sign this form because this form will help you, because this is a form to show that you're a Canadian person for tax purposes, and then will reduce your withholding tax, because if you don't have this form, you might end up paying up to maybe 30%. So it's very important, whenever you open an account, you have to sign this form. Make sure you have signed, especially if you are holding your stocks in taxable accounts. So you have to make sure of that. So what happens if you have a taxable account, right? So for example, is an account that you paying tax every year. So there's agreement, of course, between the two countries that you do not do double taxation. That means whatever tax you are paying in the US, withholding taxes, that you get taken from the dividend that you've received. What happens? Your brokerage will give you a form in the end of the year. Then you're going to take that form and you're going to submit to Revenue Canada, and they will deduct those taxes you've already paid in the US, so you don't have to pay in Canada. Those are the agreement. It's very simple and easy. But what if you're holding a US stock and now you want to sell that stock? So when you hold a stock, a US stock, let's say for example you hold Procter & Gamble, and you've get your stock double and you're selling this stock right now, you have a capital gain. So the capital gain, there's no withholding tax on capital gain. So let's say for example you put $10,000 and now you've sold your stock for $20,000, right? So now you have $10,000 gain. The whole gain will come to you in your account, and when you sell that, of course you're going to pay tax somewhere, which you're going to pay in Canada. So if you hold for long term, that's going to be considered long-term capital gain. So depends on the account that you're holding. Again, if it's taxable account, business for example, you're going to pay 10%. If it's individual, depends on your income. Again, you're going to pay is a 50% of 50% of the gain of that you're going to receive, right? So if it's, for example, it's $10,000, is going to be taxed only $5,000 of that $10,000, and then it's going to be on the marginal rate of your tax at that time. So that's just a very brief description of tax dividend and tax withholding tax for a person who is Canadian who wants to invest in the US market. So if you have any question, just make sure you leave a comment below, because I'm going to make a videos based on your questions. I think it's very important for me to do that, and it's very important for you to ask questions so I can know what you're thinking. If you haven't subscribed, just make sure you subscribe on this video, on this channel, and if you feel this video helps you in any way, just make sure you give me a like. Till meet again, bye bye.